Good morning from London. I'm Anna Edwards alongside Guy Johnson and Chrissy Gupta. We're an hour away from the opening trade. Here's what you need to know. Asian shares mixed after China urges insurers and mutual funds to buy more stocks, the latest support for markets in the face of Donald Trump's tariff threats. Billionaire bust-up. Elon Musk spars with OpenAI Sam Altman over President Trump's $100 billion AI effort, questioning whether it has the required funding. Plus, Ukrainian President Volodymyr Zelenskiy tells Bloomberg that any effective peacekeeping force in Ukraine must include US troops.
In the meantime, a quick check on these markets. Risk sentiment pointing to the downside here in Europe. Euro Stoxx 50 futures down about 0.2%. The underperformer, though, is the FTSE 100 down by about 0.3%. Even euro dollar and the pound under some pressure. 104 on euro dollar, 123 on cable. The countdown to the opening trade starts right now.
Good morning, Thursday morning. T+4 could have been worse. The world seems to be unclenching. That certainly is the message we're getting from markets. Everybody just exhaling gently. Certainly the Trump threats that we saw coming into the administration, the inauguration, appear to be not being fulfilled just yet. But we're waiting and we're watching. And stocks are loving it.
Yeah, that just yet's doing a lot of heavy lifting, isn't it, Guy? We're certainly waiting for when we get further information on tariffs. But in terms of the stock story, let's go around the world. US stocks doing well. Yesterday it was a tech theme, but more generally year to date it's been a little bit broader perhaps. The AI boost from Project Stargate helping things yesterday. And, of course, there's a lot of Trump trade in there. In Europe, is that Trump trade or is that just because stocks are cheap? John Author's out with an interesting piece highlighting how well European stocks have done since the start of the year. Defence stocks, of course, doing OK as well. And then there's China on top of that, trying to get more pension money and insurance money into their stock markets. And that worked for a little while, although that has faded a little this morning. But broadly, year to date, a positive stock story.
A positive stock story, but maybe Europe just kind of riding the tailwinds, to your point, of the other two major regions around the world. And given that so many European companies and corporates in the Stoxx 600 have that exposure to the States, if you're bullish on the U.S., maybe you're bullish on European equities by default.
So I read John's piece this morning. But why now? Europe's been cheap for ages.
Yes.
Why is it now that some reason that narrative seems to be coming to the fore?
A little uncertain, but it certainly is getting more attention. Bank of America survey, more enthusiasm for Europe for reasons unknown.
Do we think it's simply because we were waiting for some sort of kind of saber rattling on the tariff front that maybe we just didn't get for Europe just yet?
I think that's a point, and I think that's a point sort of generally for stock markets more broadly. Everybody was very clenched, waiting for Trump to arrive. What were we going to get? What were we not going to get? What was the tariff threat really going to look like? How bad could it really be? Not all of it's materialised. Look at the dollar. The dollar's dipped on the back of some of this as well. So you can see the VIX coming down. You've got volatility gauges more broadly coming down. That encourages risk-taking. Val was pointing out this morning, FX vols come down, but the VIX is at 15. So it's all come together. It could have been worse, seems to be the narrative.
And tech stocks were part of that narrative yesterday, weren't they, Chrissy?
Yeah, they absolutely were. Even though so many of the tech stocks, maybe the tech companies that Donald Trump has been talking about lately, aren't actually publicly owned. They're privately owned, and they're figures behind the scenes. But that isn't really stopping that tech theme. Of course, now you're seeing maybe a little bit of a faltering in the bromance or lack thereof between Elon Musk and Donald Trump, because Sam Altman is now getting in the picture. $100 billion of investment promised, up to $500 billion. And it's creating some concerns about just how viable that investment looks like.
I wonder whether Musk is missing the point because of his antipathy, maybe, for Altman. The two clearly don't get on. And I just wonder whether the bigger picture here actually is that the US is looking to spend an awful lot of money. And that's the bigger picture. What part Musk plays in it remains to be seen. The other question I think which is really interesting here, and you've got two different write-ups, is Microsoft. So the Journal's front page this morning is going with the idea that Microsoft is being left out, that the Microsoft CEOs in Davos and the OpenAI CEOs in Washington, that's important. We're writing it up slightly differently, saying that actually maybe Microsoft gets a kind of free ride here.
You don't have to pay.
Because you don't have to pay, you're not part of this, but actually you pick up some of the benefits. So it's going to be interesting to see how the market takes Microsoft and its relationship with this process as well.
Certainly that bigger picture message of the US taking AI very seriously, the infrastructure, the data centres around AI, that does seem to be the big picture. I'm interested, though, in whether this tells us anything about the way that Musk and Trump are going to get on and the way that Musk might handle some of these conflicts of interest that are going to come flying at us at a rate of knots, no doubt, as we get further into these tech stories with him in the White House.
Well, just the fact fact that Donald Trump has come in, it's just a couple days into his presidency. He's already talking about being a deal maker, being a big kind of bringing in investment into the United States. At what point does this infrastructure investment end up becoming critical infrastructure for the U.S. and therefore a government stake is somehow brought in? That's something he floated the idea of around the TikTok story when trying to find a buyer. How long before it extends to AI?
Absolutely. I think that's going to be one of the key. It clearly is going to be an AI story, an energy story as well. And the kind of the Venn diagram of the two are going to overlap really significantly because it feels like these companies are not just data center constrained, but the data centers are then power constrained. And that is probably one of the biggest narratives that we need to watch. Let's talk a little bit about what's been happening in Ukraine. Fantastic interview that we did yesterday with Volodymyr Zelenskiy. I thought that was really, really interesting to listen to what he had to say. Talking about the idea that actually we need US troops to be part of a group that comes together to guarantee the security of Ukraine, and the fact that he is not prepared to make that move to talk about talks until that security guarantee exists. How is Trump going to feel about this? Trump has made it very clear he doesn't want to put the US in harm's way as much as it has been in the past. But Zelensky's making the point that basically Europe doesn't have the resources to make this happen. I thought it was really interesting, the Truth Post as well, that Trump delivered yesterday to Vladimir, like a direct message, basically. Like the two could pick up the phone, but why use social media when like there are better opportunities? And it's basically saying, do it or it gets worse. And it was a really quite a strongly sort of worded message.
Yeah, partly capitalised. Let's make a deal. Make a deal. No more lives should be lost. And the price that he is, or the card he is playing, President Trump here, is around sanctions. We've already seen a lot of sanctions applied to Russia, but he thinks there's more to go for. And you know, when you ask experts about this, they talk about oil companies, Russian oil companies, and perhaps that's where this one goes next.
And this was something that we know Joe Biden had kind of waited until the very last minute to really kind of flex his muscle on, because the ripple effect back onto the American economy is huge. The global, you put sanctions on these third-party cargoes, ships, for example, that puts oil prices up globally, even though U.S. consumers don't have that immediate Russia exposure, but that ripples back into that global price.
Just to bring this back full circle to where we started, European stocks. European stocks also, could they benefit from a deal being done in Ukraine? Like, is there a sort of element to that as well that maybe is starting?
That's certainly something that some strategists have been talking about, isn't it? Around this desk, they've talked about how that does provide some upside.
It would take away a negative, certainly, which you can argue is a positive. Let's talk about what we've got coming up on the show. Big theme, obviously, coming out of Davos today. Oliver Blum, the Schneider Electric CEO, is going to be talking AI, data, energy, all of those sort of things. The Prosus Napster CEO is going to be joining us a little bit later as well, as is the Egyptian Minister of Investment and Foreign Trade, Richard Gnodde, Goldman Sachs Vice Chair, also joining this show a little bit later on. A packed schedule.
Certainly a lot happening on the show. Plenty more coming up around the world as well. Let's talk about what else is on the agenda. 9 a.m. UK time, we do have the Norges Bank rate decision. We were talking about the oil impact that's likely to show up, at least in some of the commentary out of Norway as well. The rate decisions continue with Turkey at about 11 a.m. UK time. And the focus goes back to the States on U.S. initial jobless claims at about 1:30 p.m. UK time. Just about 90 minutes after that, we get data out of the Eurozone, the Euro area, consumer confidence numbers. And then I think maybe the highlight of the day at 4 p.m. UK time, Donald Trump addressing the Davos crowd via satellite, we're told. And I think we have some earnings as well. But I think what Donald Trump has to say may just trump all of the rest.
Yeah, absolutely. So he addresses the group and he takes questions. That seems to be how this is going to work.
OK, talking about how is it going to work? Like, so we understand that Anna Botín, Patrick Poyan are going to be asking, are they going to stand up in the room in Davos with a microphone and ask questions to a giant Donald Trump on the screen? Perhaps. I'm just wondering what the visuals around that are going to look like.
Perhaps he looms down. I wonder what you ask if you're one of them. You're from the banking sector, you have exposure to the US. You're from the oil sector and you have exposure to the US. Do you go in with a question that's very much about your sector and regulation or oil supply and his interventions there, or do you go with something bigger picture around his view of the world and his worldview? That's going to be interesting as well.
And option 3 I'll throw in there is how's he viewing some of the other countries, right? Anna Botín has a lot of exposure to Mexico, for example, in Santander. The oil sector has a lot of exposure in Canada, for example. I wonder how much of this ends up becoming a tariff conversation at the end of the day.
So if it was me, stand up. How do we get growth in Europe? Come on, give us the Trump playbook.
The recipe
for delivering growth in Europe. What would you do? How would you make Europe great again? I wonder
Yes.
how he would answer those questions.
I'm sure you'd like the question.
I'm sure he would like the question. It'd be certainly entertaining to hear the answer. What else do you need to know this morning? Let's run you through some of the details. Prime Minister Keir Starmer has announced plans to limit legal challenges from causing delays to major infrastructure projects in the United Kingdom. It's the latest effort to convince investors that the government is serious about economic growth. Local opponents and campaign groups will be given only one legal attempt to block major projects. Speaking to Bloomberg in Davos yesterday, Chancellor Rachel Reeves put it bluntly.
The answer can't always be no. And that's been the problem in Britain for a long time, that when there was a choice between something that would grow the economy and sort of anything else always won.
Rachel Reeves, speaking to Bloomberg yesterday. We have also learned that the ceasefire agreement between Israel and Hezbollah is likely to be extended when it expires next week. Sources say both sides are unlikely to resume full-scale fighting despite not yet implementing the original terms of the truce. The deal gave Israel 60 days to pull out of southern Lebanese villages, with Hezbollah required to withdraw north. And parts of the southern United States have been hit with their worst winter snowstorm in 130 years, with as much as 10 inches of snow piling up in New Orleans. That smashes the previous record. Get this, the previous record was 2.7 inches. That was set back in 1963. We're now talking about 10 inches, a significant multiple of what we've seen before. Similar accumulations of snow were recorded in parts of Florida and over in Texas. California, though, is facing the opposite problem. Fire crews there are making progress on blunting the threat from an enormous new blaze, which is north of Los Angeles. The Hughes fire erupted before 11 a.m. local time and has already expanded quickly to more than 9,000 acres, leading to evacuation orders and warnings across the area. The wildfire has stoked fresh fears in the region of an already devastated by deadly infernos that have killed at least 28 people and destroyed nearly 15,000 buildings. The fire and the ice, it's amazing to see the United States going through such extreme weather conditions in different parts of the country simultaneously. And at the same time, we've got a backing away by the Trump administration of climate initiatives.
Yeah, it's a fascinating one because it also comes at a time when, I mean, just growing up in Texas, when you have even the prediction of snow, the issue is you don't actually have snow plows in Texas. You don't have the infrastructure to deal with it the way you would, say, in New York City, for example, where immediately, you know, a millimeter of snow comes in and suddenly they're slushing it on the sides of the road. That doesn't exist really in the South. So I'm curious how this shows up in the likes of the GDP and the numbers.
And talking of numbers, it's already showing up in European gas prices. We saw a spike on Tuesday, actually, because of fears that this would disrupt the LNG flow from the southern states of America over to Europe. And so that had an upward impact there. We've also got insurance companies talking about what they call rising bullseye insurance risk, which is that as US cities sprawl, the percentage chance of one of these events hitting the insured infrastructure rises. And so this is how this is increasingly being thought about in the insurance sector. To
make the ripple effects of all of this, I think we're going to be feeling them for quite some time. They're going to show up in the day. The employment numbers are going to be really interesting to watch and see what happens. What's happening? We're going to get claims data a little bit later on. What is that going to tell us? Maybe that starts to show up in some of those numbers as well.
Let's tell you what is coming up on the rest of programming then. Coming up, the Dutch Prime Minister says he expects President Trump to keep pushing to restrict exports of ASML's chip-making machines to China. More from that interview. That's coming up later on in this show. Plus, we'll also bring you our exclusive interview with the Ukrainian President Volodymyr Zelenskiy as he calls for US troops to be part of any peacekeeping force in Ukraine. Up next, we'll go back to Davos, back to the slopes. We'll speak to Charlie Nunn, the CEO of Lloyds Banking Group. If you have questions, if you want to get involved in any of our conversations this morning, we do like to hear from you. IB plus BBTV Go, that is the function to use whether you are in Davos or anywhere else around the world. Please get in touch. This is Bloomberg.
The policies that are announced are not particularly growth enhancing, not only for Europe or for the rest of the world, but even for the US, if we take a long-term perspective, doesn't look like. I mean, and at the same time, I mean, the policies can be potentially inflationary in the US. It's less clear whether there's going to be spillovers to the rest of the world, but this is something which requires careful monitoring over time.
Careful monitoring over time. Growth does seem to be the conversation that is taking place in Davos at the moment. That seems to be the centre of gravity. The governor of the Bank of Spain speaking to Bloomberg at Davos yesterday.
Let's continue that conversation in Davos. We can get more from the World Economic Forum now and head over to our very own Francine Lacqua, standing by with a very special guest. Fran.
Kriti, thanks so much. I'm delighted to be joined by Charlie Nunn, the Chief Executive of Lloyds Banking Group. Charlie, thank you for joining us. A lot to talk about. A lot of the focus here is on trade. President Trump will address a lot of chief executives that will also be able to ask questions. What do you think the mood is like? Europeans are actually quite depressed.
Yeah, it's been a really interesting week. Obviously, it's early days in the Trump presidency, but our colleagues from North America are really excited about what's going on. Yep. There's real excitement in other parts of the world, parts of the Middle East like Saudi Arabia, India. And of course, Europe is trying to work out where it goes from here and how it gets some growth back. There's a real concern about growth in Europe. And the UK is a little bit different, but we'll talk about that in a second, I'm sure.
Yeah, so how worried are you about the UK? Again, we've seen market turmoil that was started in the US, but the Chancellor is in some parts being blamed for. Has she done a good job here in Davos, convincing bankers to invest more?
Yeah, she was here yesterday, and I think she did a good job engaging with all of the communities and giving some very strong messages. As you say, the UK's had uncertainty in the last few months. It's not been significant uncertainty, the kind of uncertainty or volatility we've seen in the last few years. But obviously, it's been important for the markets to adjust along with the US and some of the global political uncertainty. In terms of the UK economy itself, it's a slightly more mixed picture. Actually, when you look at households and businesses, they are very resilient. One of my favourite stats at the moment is household savings and deposits have increased 6% over the last 12 months. So people have money. There's a nervousness around the economy. There's a negative sentiment at the moment. And the real opportunity for the new government, now they've got the foundation set, is to get the ambition and the growth back in the economy. And that's what we think is important in the next 12 months.
How does the Chancellor do that? Is there a spring statement that she needs to change where she talks about spending, or will market readjust itself?
So, look, I don't think there's going to be any single event that's really going to make a difference. The Chancellor's talked about having set the foundations and got the foundations right. That was really important. We didn't have a kind of an economic plan for the UK that was stable and in a good place. But what we see over the next few months are the things they've talked about need to now be accelerated, and they need to come at pace. Yep. So some of the supply-side reform around the industrial strategy we're expecting. The regulatory agenda is really important. There's an opportunity to get people to be able to take the appropriate level of risk and get the economy going as the regulators prioritise competitiveness and growth. Planning is really important, as we know. Everyone will have talked to you about that. So there's a set of these changes, and we now need to see action and accelerated pace of impact for our customers, for the UK.
Charlie, when you see a headline saying, look, Santander thinking of exiting the UK, that doesn't spur confidence.
Yeah, there's been a number of business leaders who have been concerned about what's going on at the moment. Obviously, that's one for the Santander CEO, Anna, to talk about.
So you're not buying?
We would never talk about M&A. As you know, we're very confident in our current growth strategy at the moment, and that's going well. We're year 4 of 5. But the sentiment has been challenged in the UK in the last few months. But as I say, the opportunity to get growth going is really available for the UK, and on a relative basis. When we just look at the kind of broader landscape this year, we see growth accelerating probably in the US. If tariffs do hit the rest of the world, I think the rest of the world will slow down. But the UK, with the structure of its economy, more services-based, very international, no supply chains heavily into the US, there's an opportunity for the UK to really stand out. And you've seen the IMF come out and say they think UK growth will be stronger than the other G7 economies apart from the US. And that's a great foundation for thinking about the future.
Yeah. But what kind of relationship does the UK need to have with Donald Trump? Elon Musk got involved, and that hasn't gone well at all.
So politics is way above my pay grade, as you know. But look, one of the things we learned from Trump is he does what he says. And from what I saw on Monday and the last couple of days, actually, there have been no surprises. The real question is, does he follow through and can he execute? And that's where the uncertainty is now. We have no uncertainty around his policy and his priorities. And I think the UK needs to really navigate that carefully and then really focus on itself. What we see is businesses want to invest in the UK. There is capacity for households and businesses in the UK to get some growth going. And so focusing on ourselves and getting these changes made that we just talked about, that's the real focus for 2025.
Charlie, we understand Elon Musk is looking to have a kind of like payment platform, a little bit like the Chinese model. I mean, is it something that Lloyds would be interested in providing the backbone for, a payment system online?
So, as you know, we're the biggest payments provider and actually the biggest digital bank in the UK, and when you look at our numbers in Europe, so we're very much about innovating in payments. We also, though, are really concerned around protecting our customers. you've heard me say before, one of the things we've been concerned about is the amount of fraud happening through new and emerging payments platforms, but also just through social media. And 40% of individual crime in the UK is fraud, and 80% of that is being facilitated by the social media and big tech companies. So our first focus is let's get the right control and focus on protecting customers. Yeah. There's great digital instant access and free payment services to customers in the UK and for businesses. So let's get first focused on really protecting customers from fraud.
Is AI a help or a hindrance in that respect?
We are a real believer that AI is going to help us improve our services for our customers and differentiate. And we use AI today to protect our customers from fraud. It's one of the ways that we have a lower share of fraud than we do of our customers. So we think it's a really positive part of this story. AI used badly could absolutely expose customers to the kind of harrowing impacts of fraud. So, as always with AI, it's two-sided, and we really need to use it carefully if we're going to be able to navigate the next few years well.
Charlie, for example, on motor finance, you previously said that the rising cost of motor finance is actually a real hindrance for some of the banks. Is an investability problem in the UK also linked to things like that?
Yeah, it is. So we've got a unique situation in the UK. As you know, I've been in my prior life run institutions across 60 countries. We had a Court of Appeal decision last year on motor finance, which is at odds with 30 years of regulation. And 80% of people in the UK, when they buy a car, need finance. Yeah. And we are concerned both to make sure that the auto finance and motor finance industry can continue to support customers well, but also that we can remain an investable location where international investors can think that regulation and the rule of law is predictable is a really important issue. So actually, we welcome the government getting involved in the law case in the Supreme Court hearing. There's a Supreme Court hearing later this year, and we really welcome those two events.
And Charlie, on mortgages, so interest rates could stay higher for longer because of inflationary pressures in the UK, but also coming from the US. Where do you see them heading?
Yeah, so we for a long time, I think, this time last year, people were predicting 5 rate cuts. We predicted 2. Because we saw the underlying strength of wage inflation and the services inflation. This year, at the moment, our guidance is there will be 3 rate cuts this year. So we've seen for a long time that there'll be a steady decline, but it'll take longer. Obviously, the markets at the moment are predicting that rates will stay higher for even longer. 10, 30-year gilts have gone up. But the dynamics are still very much the same. We have a very resilient household and business sector. As you know, real wage growth has been strong last year, so there is money in the economy. But actually, the overall level of growth we're predicting is only about 1–1.5%. So pretty resilient but slow growth at this stage. And we think rates will come down, but come down slowly.
Charlie, thank you so much for joining us today. That was Charlie Nunn, the Chief Executive Officer of Lloyds Banking Group. With that, I'm going to send it back to you in London, and we'll have plenty more throughout the day.
Francine, thank you. Bloomberg's Francine Lacroix, of course, in Davos with Charlie Nunn. So Charlie Nunn then obviously welcoming the UK government's expected intervention in the motor finance case. And we saw that boosting stocks at the beginning of this week within that sector. So Lloyds, Barclays and others that provide that motor finance.
There does seem to be a shift taking place. You can feel the early tremors of it. It's not kind of a Barber-like dash for growth. We're not talking about that here. But it does seem as if the penny has dropped, at least maybe in the UK, post the budget and the shock that the budget caused within the government here, that actually structural reform is necessary, that actually you need to be pro-business, that you need to be pro-growth. It's not just going to happen sort of by magic.
Yeah, and the sense we get from some investors we talked to that we heard a lot during the budget about the tax side and the fixes, the finances, but not enough about the growth side.
Yeah, I mean, there's a believability, a credibility factor that's almost missing, but maybe that'll change in a little bit.
But this is the lesson that Trump is maybe teaching to Europe.
Yeah, perhaps. That'll be the question later on. Coming up on the programme, we head back to the World Economic Forum in Davos. We'll be speaking to the Schneider Electric CEO, Olivier Blum, joins the team. Data centres, no doubt, in focus. This is Bloomberg. Welcome back. This is the opening trade. 30 minutes until we get that opening trade. So the futures picture then for Europe looks like this, pretty flat. Not expecting any great moves at the start of trade. US futures pointing a little lower. Nasdaq futures down 0.3%. But of course, we saw a lot of strength in tech names yesterday. A lot of strength globally. US stocks and European stocks hitting new highs intraday at least, even if not by the end of the session. Let's have a look at the bond markets. We do seem to be a bit of a holding pattern in bond markets and in FX markets to some degree, waiting for further clues on the Trump agenda. We'll probably get those a little later on today, but we need to go back to Davos, Guy.
We do. So tech, AI, data centres driving the market narrative over the last 24 hours. Let's get another take on what is happening there. I want to take you back to Davos, back to the World Economic Forum to continue this conversation with Joanna Masayoshi.
Hi, guys. Good morning. Yes, to continue that conversation, with me now is Olivier Blum, the CEO of Schneider Electric. Good morning to you.
Good morning. Thanks for having me.
Yeah, before we talk about the business, I do just want to ask you what your plans are, what your roadmap is for this year, because you've recently been appointed as CEO of Schneider Electric. How are you going to do things differently from your predecessor?
Well, look, you know, the world is full of opportunities at that point of time. When you are a global leader in energy, you imagine how much the topic of energy is important. So it creates huge opportunity. So priority number one for me and my team is how we accelerate the growth, you know, how we can go even faster in this cycle, which is very favorable for Schneider.
Yeah, well, you say the cycle is very favorable for Schneider. You have top sustainability rankings, Corporate Knights. I believe it's the second time that you've done that. Which is great. But then you also have a Trump administration that's coming in. One of the first things that President Trump announced is that he's pulling out of the Paris framework. What does that do to the sustainability agenda?
Well, look, number one, on the business side, you know, I told you we are a global leader in energy. So what does it mean? We develop the technology that make energy more efficient in home, in data center, building industry and infrastructure. That does not change anything. At the end of the day, people want to find a way to secure energy, to better manage energy and to save. So that big part of the agenda of large company up to medium to your home, it does not change anything. At the same time, being sustainable is not only about what we are talking about today. For us, the journey started 20 years ago where we said, if we want to develop sustainably Schneider Electric everywhere in the world, we have to look at the entire ecosystem. So this is what sustainability is about for a company like us.
So what about the help that has come through from the government? Just an example, President Trump has announced that he's looking to remove things like EV credits. And for your business, say, building the infrastructure around electric vehicles, that's got to be a bit of a setback.
Well, look, first of all, we have to go into all those details and not overreact this week. I know Davos is happening at the same week. Yeah. But, you know, there are a lot of things which are happening at the state level. And when we speak to our customer, because at the end of the day, it's about the end customer, we don't see any slowdown in investment in power infrastructure. You need energy. You need energy to support the reshoring, the manufacturing, the data center in the US. So all of that is extremely positive.
Yeah. Talk to me about what you're actually doing with the data centers. It's become a huge theme in the last couple of months. And, you know, where I'm from, in the region, the UAE, I know there are lots of conversations about how exactly to provide cheap, low-cost energy to data centers for AI, consuming a lot of energy, but you're massively involved in that place.
Yeah,
so
absolutely.
What are your plans?
You know, it's new and not new, because we need data. In everything you do in your life every day, you need data, and we need even more data. What AI brings is definitely data center, which has a different type of infrastructure. Higher power density. You need different technology to cool the data center. So all of that is creating a massive opportunity and acceleration in the data center industry. And Schneider Electric is uniquely positioned because we can help our customers to have access to power, to manage energy, to have the best IT infrastructure. And we have a unique positioning because we can help them from the design to the delivery of the data center. So of course the AI hype trend, which is real, according to me, because we see it in our company, is creating massive opportunity for a company like Schneider.
Where do you see the biggest growth in that space?
In that space, of course, a lot is coming from the US in data center. But if you travel around the world, you will see that in India, in the Middle East, there is also a big growth in data centers. So of course, US is a driving force, but we see that in many parts of the world, including in Europe, by the way.
Are you encouraged, actually, on the flip side? On one hand, the Trump administration has expressed, I guess, transition skepticism, but on the other hand, is very excited about AI investments with some of the initiatives announced this week as well. How do you see that as advancing your business?
Yeah, absolutely. And we are following, like you, every day what is being said. But as
it's not easy.
Yeah, it's not easy. But as you know, a lot has been said on data center. And it's very, very obvious that the Trump administration want to support the AI trend. And to do it, of course, it means there will be a lot of investment to support the infrastructure which is needed, which is, again, good for Schneider at the end of the day.
Olivier, I've been having conversations with executives here, and I've got to say the mood differs depending on who you're speaking to. I feel like American CEOs, executives are really excited about the prospect of a pro-growth, pro-administration agenda. people in Europe are perhaps not as optimistic. One of the consistent themes that has come up is lack of productivity, lack of competitiveness, and over-regulation. How do you see the scope for business in Europe this year?
Well, look, the Europe trend or the growth in Europe is not as fast as other part of the world. So we are watching that, of course, very, very, very closely. But again, if I'm back to the agenda on efficiency, even the companies in Europe, number one, they are looking for data center. They are looking for more efficiency sometimes to manage their costs. So for us, it creates a lot of opportunity. Now, if you ask me, the growth trajectory of Europe will be a bit lower than what you have in, for instance, in India, in Middle East, or even in the US. But it's still very attractive for a company like Schneider. Now, like many companies, we would like Europe to be a bit more simple, to have simpler regulation. So we are advocating that in Davos. But even from a market standpoint, we see a lot of opportunities in Europe.
Yeah. You and I were just speaking offline about the fact that the company is quite global, but obviously listed in France. There's been a bit of a political turmoil in France, and also German elections coming up. What is the feedback that you're getting from clients over there?
Well, look, by and large, our clients in Europe are looking for simplification of regulation, more alignment at the European level. Of course, France and Germany are two important countries in the landscape, and we hope that we'll get to that level of simplification. But you know, at the end of the day, our clients are business people. They are very practical people. They are looking at their business, their industry, how we can help them to be more efficient. So, you know, we have been in business for very long, and we move regardless of what's happening in the political environment.
Yeah. Well, speaking to the global hub sort of discussion that we had earlier, you and I have something in common. You also live in Dubai, but you have operations in Asia as well. How do you think about being an international company in an environment where trade protectionism is going up, geopolitical concerns, there's direct exchange of words between US and China? Do you worry about getting caught in the crosshairs?
Well, look, for us, it's a trend which has started more than 10 years ago at Schneider Electric. And as you probably know, more than 10 years ago, we've decided to distribute the global leadership of Schneider Electric. So even if we are listed, as you rightly said, in Paris, I am in Dubai, my management team is spread out everywhere in the world, and likewise with the top 500 global leaders of Schneider Electric. So we are a global company with global strategy, global direction, but in the way we operate through our different hubs. So we want to be Chinese in China, we want to be Indian in India, and we want to make sure we adapt our solution to those different parts of the world. So you're absolutely right to say it's top of the agenda, but that's something we started 10 years ago. And I think so far we have been quite good at navigating through those kind of up and down in different parts of the world. Our model is extremely reactive at the end.
But what is the biggest risk then to the outlook this year then? I mean, we discussed a whole number of factors. What is the one thing that you're keeping a close eye on?
Well, look, like everyone else, we are watching what's happening. War is always a concern. You never know what can happen in different parts of the world. We had the Ukraine, we had the Middle East, so we are also watching those extreme situations. For the rest, again, as I said, we've built a model which is quite resilient. We have been used to go through those different crises, and I'm quite confident that we are still on a good growth trajectory for this year and beyond.
Yeah. Just to round up the discussion, you're sitting on quite a bit of firepower, and I just wonder whether within your expansion plans, M&A could be part of that.
Yeah, we are always opportunistic in M&A. We have declared to the market a very ambitious plan last year for the next 3-4 years. We keep the same plan, regardless on what's going to happen on M&A. It's not, included in the plan, but of course we are watching, because this transition which is happening today creates opportunity, creates threat, and of course we are very attentive every time we can, invite other companies to join us in our growth story.
Any specific sectors you're looking out for?
Everything which is related to energy and process, on how you can make energy and process more efficient is what we do at Schneider in different parts of the world. So there are always a lot of opportunity in different sectors.
All right, fantastic. Well, we wait to hear more about your plans and how they're going. Schneider Electric CEO Olivier Blum.
Jumana Bercecci there, talking to the Schneider Electric CEO in Davos. We thank you so much for bringing us that interview. Let's go to another spot in Davos where Bloomberg's Hassan Amin is moderating a panel called The New Trilemma, Climate Development and the Middle Class. She's joined on stage by the former U.S. Vice President Al Gore and the EU Commission Teresa Ribera, in charge of the antitrust space. You can catch that conversation in full using the function LIV Go on the Bloomberg terminal.
OK, coming up, we're going to take you back to a different part of Davos. We've got a new interview coming up for you. It's going to be plenty this morning. The Prosus and NAPSA's CEO. That conversation coming up on Bloomberg next. This is Bloomberg.
I think there's a lot of changes coming for sure with the announcement of a variety of executive orders. But as with any administration change, we're happy to work with the incoming administration and just need the time to work through all the changes that are coming.
That was the Google DeepMind COO, Leela Ibrahim, talking about kind of the new administration, how you're going to work with it, how you're not going to work with it, the deregulatory process that is coming through.
Yes, and the thought process, really interesting to unpack, isn't it, from all these executives and world leaders in Davos, so new into a second Trump presidency. Let's continue to do that, perhaps. With our next guest, we'll go back to Davos. Bloomberg's Francine Lacroix is standing by. Francine.
Yeah, Anna, thank you so much. We're joined by Fabrizio Bloisi, the chief executive of Prosus and Naspers. Fabrizio, thank you so much for joining us. There's so much to talk about. Look, all the talk in the Congress Center, outside the Congress Center, on Promenade is AI, how you deploy it, if Europe is too late, if they're regulating too much. I mean, you have a sizable amount of money to spend on this. First of all, do you look at US and you're a little bit jealous of AI, or do you think, look, it'll help the rest of the world?
Look, I think the US is right. They're saying this is very important, this is going to change the world, and we have to prioritize it together, invest in as a government policy. And I think this is a great wake-up call to Europe. I'm CEO of Prosus for 6 months, and many times we're trying to push to move faster, to do more, to innovate faster here, and the reaction is, have you checked the regulation, how you're reporting regulation? I think this is a great wake-up call to we European companies, Prosus is based in Europe, to think how we are going to really play to win and not to innovate in regulations.
So on AI, what do you expect for the Trump administration? How does that change the rest of the world?
Trump administration is saying, here in Davos last year, the big thing was how we can avoid AI to move too fast. Yeah. And Trump administration changed the narrative to we are going to move faster than everyone else. So I think it's time to the rest of the world. Obviously, there are risks in AI. In every new technology, there is risk. There is risks in airplanes, there is risks in cars, or in nuclear. But this technology that changed the world completely, you have to move to win. You have to move to be the first. And look, Europe was the leader in the world in 1500s, during the navigations, during the Industrial Revolution. That's where the welfare state of Europe came from, because Europe led the world in innovation. But right now, we are talking about how to regulate it more. Right. It's wrong, and I think we can do better. And companies like Prosus, we are a $150 billion company in technology based in Europe. We need to invest substantially more here to put Europe in this race and not to keep looking from outside.
Okay, so how much do you have to spend in Europe? And actually, do you want to create an infrastructure? Is it a kind of, Prosus managed base, or are you looking for other targets?
Definitely. The big thing on Prosus, since I'm CEO, is the ecosystem. We have 30,000 people only in the control of the companies of Prosus doing technology together all around the world. So our competitive advantage is an innovation inside an ecosystem. My point is, our ecosystem in Europe is going to grow much more, and we are ready to invest. We have close to $20 billion to invest.
In Europe? 20 billion in Europe, or worldwide?
We have almost $20 billion in cash in Prosus. Okay. We are based in Netherlands, and we look forward to invest close to our home.
What are you looking at that's close to your home? Is it specific markets, or is it a type of innovation technology?
We are looking to create the future in business that can connect to our ecosystem. So today we have a few businesses in Europe, for example, OLX or eMag or Delivery Hero, but we want to invest in companies that we can connect to this ecosystem and move faster. Obviously, companies that can move faster in innovation and AI.
In the UK as well, or do you see the UK separate to the rest of Europe?
Oh, UK as well.
Are you in active negotiations? I mean, could we see a big deal quite soon?
Yes, over the last 6 months, I'm CEO just for 6 months. We invested a lot in India. We just made an IPO 2 months ago of Swiggy for $13 billion. We invest a lot in Latin America. We just bought a company like 3 weeks ago for $1.7 billion in the travel business in Brazil. And the reason we are doing that is because we believe we can put this company inside our ecosystem in Brazil and innovate faster in AI there. Said that, my priority is to do that here in companies that we can connect to our ecosystem too.
Do you think AI will actually be rolled out faster than we think? And what kind of AI? Because we talk about AI, but actually there's the ones that kind of reform the brain, and then there's the one that tells you how much you've run and how fast.
Yeah, but you just asked, are you actively negotiating? Yes, and we expect to invest soon. Much more in Europe. So we are doing many deals, and we are going to announce much more soon.
Wait, soon in like the next couple of weeks, or soon in the next year?
I think let's stop talking about years here in Europe. Weeks, months, we need to move faster. And that's what we want to do at Prosus.
Okay, give me a little bit more of what kind of company you're really looking at.
Better than that. As soon as we can talk it, I'm going to call you we talk more about that. Okay. But then, trying to run away from you, trying to know more, you asking me what kind of AI? We are talking about... Many people ask, what specific segments? AI is just like electricity. AI is just like smartphones. You are going to do your job better because of AI, and every single sector is going to run better because of AI. And if you are listening to us now and you think, not mine, then you are wrong, and you are going to lose market share. So there is opportunity to AI all around. That means, for example, digital AI workforce, how people are going to work more or have colleagues working with them that are digital colleagues. Or we talk about large commerce models that using AI to e-commerce or AI in healthcare and education, what is critical to Europe and to all emerging markets. So many opportunities. And I want to reinforce, people keep focusing in the language models, and the 3 or 4 companies doing that, most of them in US. There is 100 times more opportunity than that. This is the base. This is like the microchip. But we are going to build a whole industry and all segments leveraging on this technology to build new companies.
We need data centers. We need renewables. Do you want to be part of the infrastructure? And if so, how?
I think the focus of Prosus is to invest in the applications, not in the infrastructure. However, I think US inspired us yesterday, saying you can partner to be stronger and faster. So as I said, Prosus has close to $20 billion, and we are looking to partners that can invest more in infrastructure to invest together in big, strong European players on AI.
Your largest shareholders is China's Tencent. How do you expect the US-China relationship to be there?
My largest participation.
Participation,
my shareholder. I have we have around $100 billion in Tencent.
Yeah.
Tencent is the #1 company in China. It's the #1 company in a very big market. Yeah. So. And with very good fundamentals. Yeah. So
but do you worry about the US and China going at each other?
I worry because they are going against each other. I think Prosus Play is not China. Prosus Play is a shareholder of a Chinese company. What is good, because it's a good company. But our companies where we invest and where we want to grow is in Europe, India, Latin America, Africa, and that's where we are investing.
Would you buy TikTok?
Not for us, but wish luck for US and China on these negotiations.
Is there going to be a lot of social media play again? Are there going to be, could you build an app where you also have payment system? Is this, something that you could be looking at for Europe?
Definitely. We are doing that today in Brazil. We have a very big food delivery business there. And when we integrate with a travel business, as we just said, we are looking for how is the future of the assistant for the customers. It's not only an app, but there are assistants that can supply all kind of service to the customers. So we are already doing that in a few markets, and hopefully we can do that in Europe too.
Who's the most impressive person on AI that you've met here in Davos?
I think it's great to hear from OpenAI, obviously, but also from Google. I think last year we had they were talking about the monopoly of NVIDIA. Also, last year we had the monopoly of OpenAI because they were so much ahead. But I think today it's a different play. Obviously, OpenAI is amazing, but we have other 5 players doing amazing basic models. What is great for the market? We have opportunity to use many players to innovate on top of that. So I met many of them here, and I'm super excited to partner with them all.
Fabrizio, thank you so much for joining us. That was, of course, the Prosus and Asper CEO, Fabrizio Bloisi. In the meantime, I'm going to have a double espresso Critti, so I talk properly for the next interview. I'm going to hand it back to you, London.
Francine, I think we could all use a double espresso, even right here in London. We thank you so much for bringing us that interview. I think the most kind of interesting thing that he said among a flurry of news was he said we can't talk in years. We've got to talk in weeks and months when it comes to deal making and when it comes to kind of catching up, basically, to the States.
Echoing things he said to us in this room when he came in to talk to us about how Europe needs to be more positive and needs to grasp the growth agenda. He was quoting Draghi and liking what he'd heard there. So he's always been a big advocate for Europe doing things differently and innovating.
In theory, Europe has the greatest opportunity to deregulate, right? So if the regulatory burden here is the greatest, if you start to deregulate, if you start to cut red tape, presumably you get a bigger growth effect coming from that than maybe even you see in the United States.
But this isn't something you see in the banking sector, I think, most notably, where you've seen kind of these capital requirements kind of almost deregulate, to your point, to catch up with what's going on in the States. So I wonder if this is the fire that's being lit
We've heard
in Europe.
plenty on the banking sector talking about wanting to see less regulation, haven't we? And other sectors, in fact, in Davos, but certainly the banking sector stands out. You know, these things, do they go in a pendulum? Is that where we are? Does Europe follow the US as this pendulum slowly swings towards less regulation, or faster than slowly? Given
How do you get growth in Europe? Does Europe need a cheaper cost of money? I think that's probably arguable. I think you probably would help, but is that the structural? Is that the centre of the problem that Europe faces right now, or is the centre of the problem?
Yeah.
Actually, we need to deregulate.
Yeah. Because if they go for a cheaper cost of money, you're pushing against the US, where the Fed is not going to necessarily be able to deliver that. But if you go for less regulation, then that is in line with what the US is doing. Is it easier to follow that US course, I guess?
Yeah, especially when the US is looking great, but it's really expensive as an international investor to hop into the States in AI, in energy. Pick a sector. It is hard to get into it as an individual investor or even as a company.
I was slightly stunned yesterday to read a piece in the Wall Street Journal talking about that maybe a slump in US stocks would be a good thing, because maybe the Trump administration wouldn't welcome it, but it would be good to allow actually money to get back in, for people to get in, to create a more dynamic market. Anyway, coming up, we're going to be talking about those markets. It's the opening trade. We are 5 minutes away from the start of trading here in Europe. This is Bloomberg. Thursday morning, good morning. T+4. Trump definitely setting the agenda over the last few days. Equity markets have been ripping around the world. Certainly you've seen that in the United States. You've seen it in Europe here as well. Does that continue? Is Europe beginning to get to overbought territory? I know that feels a peculiar thing to say, but near term, maybe just that's what we're getting to. This is the story in terms of the picture yesterday. We actually sold off into the close in Europe. Remember, we hit highs yesterday, so just bear that in mind, the kind of the absolute levels that we're watching here. The US kind of rolled over a little bit. I'm not sure there's a clear steer out of what we see on this chart into what we're going to be seeing in Europe this morning. Remember, Trump speaks a little bit later to the World Economic Forum. Is that the big moment of today? Or it could be futures, kind of how they pick up in the States, Critty, or it could be maybe that labour market data as well to focus on.
Yeah, perhaps that weakness you saw into yesterday's close continuing today. You're seeing that already in the futures picture, down about 0.2% in the FTSE 100. The Eurostoxx 50 futures down about flat as well. There is a moment of outperformance, marginal outperformance, Anna. It's in the French and German indexes, only higher by about 0.1% at the moment.
Right, let's go to some of the individual stocks that could be on the move then, Critty, because we've got a different story to tell about the athletic leisure market this morning. Adidas was yesterday. That lifted Adidas and it lifted Puma. Today we've heard from Puma, and the story is not as good. We are expecting to see weakness in that share price after they reported preliminary net income that came in below estimates. Let's go to another fairly negative corporate story. AB Foods, the owner of Primark, they are now targeting Primark full year 25 low single-digit sales growth. They're keeping the other areas of the business the same, but lowering the guidance there. And Swedbank in focus, a better story there, better than expected profits from that banking business guy.
Let's talk about the index levels. Let's talk about what is happening here in Europe. It's been a really good run recently, hasn't it? Let's see if that continues into the open here this morning. We're expecting a fairly flat picture. Critty's just been laying out what the futures picture looks like, and I think we're already going to see evidence of that coming through with the FTSE 100. No clear sense of direction emanating early out of the European story. But does that change a little bit later? So many potential moments in today's session that are going to be interesting. Is it the claims data? Are we going to see some sort of an effect coming through from California? What does that labour data tell us about the trajectory for the economy? I know it's week to week, but it's high frequency. What is that going to tell us? Or is the main event what comes out of this event with Donald Trump speaking to the delegates of the World Economic Forum a little bit later on? So much maybe to throw into this market. But early doors, I would argue, maybe not a clear sense of direction coming out of Europe, as you were, seems to be the narrative.
I think that's a fair one, and one that's kind of a tale of two tech stories, at least from the initial reaction that you're seeing in the opening trade here. The Stoxx 600 under seeing some weakness, but it really is those heavyweights, that core six, the sensational six. Not so sensational today, where some of your biggest weights are coming from that bunch, but some of your biggest outperformers also coming from some fan favorites. Schneider Electric, for example, moving to the upside. But, I mean, I think it's the right characterization, Anna. Like I said, it's kind of a mixed picture today.
Right, it is a bit mixed. Nice moment then to reflect on. Yes, interesting that Schneider Schneider Electric is doing okay, because I was looking at some of the names connected with data centers and AI that have been doing well recently. According to Bloomberg Intelligence, they had a nice chart, and you have to go quite far down to find those European names. They are in there, but they're far down the list, and lots of US names above them. In terms of things that are moving around this morning, interesting to look at where... I don't think we've got an opening price on Puma just yet, but interesting to see how weak that goes because of what they've told us overnight, but because of course, the yesterday story around Adidas was so strong, and that pushed Adidas up, but it also pushed Puma up, and so you would expect to see something of a pullback when that one opens.
EQT out with numbers this morning, private equity, actually talking about an increase in exits, which I think is interesting as well. That stock's up really strongly at the top end of the market, so we're seeing some evidence of maybe a little bit of positive news from private equity coming through, so that's fascinating. ASML's quite weak, which I think is interesting too. Where does that stem from, given that actually the chip story has been relatively positively recently? And it's interesting that the miners are kind of hot on its heels. But it's actually European tech is under a little bit of pressure this morning. ASML is down. SAP is also soft, which I think is interesting too.
We've gotten a downgrade to ASML, but, you know, there are plenty of other analysts out there with a different view, so I'm not sure how much that is driving today's move, but there is one downgrade to them today out there, so that could be something to factor in.
But this whole tech outperformer this morning, Schneider Electric having a good day despite some of its tech peers, as you point out, on the back foot, ASM as well. But it's interesting that alongside tech, and you have energy dropping as well. We should also mention we're keeping an eye on Puma as well. Puma shares are taking a little bit of a hit as well, so we're going to dive into that story shortly. Let's take a big picture look, though, at this market and whether or not Europe is maybe having a moment. Let's bring in an expert. Markets Live executive editor Mark Cudmore joins the program. Mark, we've been talking all morning in the last hour or so about what the bull case for Europe actually is. Is it cheap enough to own at the moment? Your view?
I think the long-term bull case is still not very exciting, but I think you've hit kind of nail on the head there, Critty, that it's the negatives are largely in there. It's very, very discounted. And remember that we're trading this week a very positive macro tailwind. The big bad wolf of very aggressive tariffs has not been delivered. It's not been delivered anytime soon. Sure, it may come in the future, and that means that risk assets can rally. They can focus on the fact that earnings are generally good. So I remain positive stocks generally, globally, and I think the discounted ones, the ones that were pricing in perhaps a new world that was all about like US companies, I think probably incorrectly so, are going to gain the most. That's why I think that many around Asia, Europe, they're the ones that can gain. It's really important to emphasize that while I'm painting this very, very positive picture, I don't think this is a long-term one. I think it is a window that lasts for a couple of weeks. We're still going to have a volatile new US administration, and we still have expensive valuations in the US. So this is not about aggressive bullishness, but it's that we've got a window to be positive that lasts to at least the end of next week. Let's see how much longer.
If you look at the options market, there's not a great deal of call buying at the moment. This doesn't feel like a market that's being chased. Does that kind of, how self-limiting is this rally if the market is waiting for more bad news? How far can it really take us, and how convinced do you think traders really are about it?
So I think this ironically makes it more sustainable but less powerful. You're absolutely right that people are kind of going, yeah, we've got no tariffs now, but they still could come at any point, and things can change quite rapidly. And we already have expensive valuations for a lot of US stocks in particular. So people are not going to get enthusiastic just because we're given a relief window. But it's actually because that people are nervous out there. We don't have excessive positioning. We don't have excessive bullishness out there. We saw that from the sentiment, the AAII sentiment survey only a week or so ago, that the bullishness had suddenly dropped despite stocks being near the high. It's because of that nervousness that I think that we keep on kind of grinding, to slightly higher highs, despite the fact that we don't get any ebullience out there, any effusive bullishness.
Let me ask you about Chinese stocks, Mark. We've heard some initiatives from various regulators over in China trying to get more pension money, insurance money into Chinese stocks. The bounce as a result of that was pretty short-lived. We are still positive on Chinese equities, but only just. But it did deliver a sugar rush to markets. Do we view this in the context of, now we're in the Trump presidency, now China can start to unleash some of the measures it's been keeping up its sleeve? What do you make of that news flow?
I mean, first of all, you're right, Anna, to make the point, and I'm going to repeat it. It was pretty underwhelming reaction out there. I mean, this is a market where there's a large retail participation. It would be hoped that this kind of institutional boost would make a difference. But it is, over a long period of time. It's not going to necessarily be an immediate impact. I think this is just yet another measure, which we've seen many over the last 4 months now, of trying to a marginal measure to stabilize the market. And I think it's the same story. Look, this is a market that's up about 25, 30% over the last 4 months. And that's the idea that it's not going to keep on going on up at that pace. And in fact, this is an economy that has structural problems. They are now acting very aggressively to counter those structural problems. But this doesn't get us back to the old school China bull market that people really, really want. It gets us back to a market that's probably going to return better than average returns. It's probably going to be an overall good investment, but it's not going to be an exciting one. And there'll be something else out there that beats it. But if Chinese, Hong Kong stocks, if they can return 50% this year, that's a good return.
Well, Mark, when it comes back to European stocks, what is the bigger read-through? The headline risk you get out of the United States, or perhaps some of that fiscal stimulus read-through from China?
I think it's still going to come down to America. I think that's the more important one at the moment. As I said, I am very much in the camp that we're probably not now getting tariffs maybe to April. It's still likely tariffs are going to come through at some point. We've got the new arm of the U.S. government that Trump's setting up to collect those tariffs. We know he's in favor of tariffs. We know they'll likely come. He might even impose them just temporarily for negotiation points. But we know tariffs are likely to come at some point. On who and at what level we don't know, and what sectors we don't know. And I think that is ultimately still going to remain the big story for 2025, even if it's not the story this week that we thought it would be. So I think that's still going to be the biggest driver for Europe. The other issues for Europe is that, as I said, in the stocks market, much of the negativity around European growth is priced. It's a valid negativity. It's not like Europe is suddenly a bull story. European growth is problematic. European debt problem is problematic. European politics is very problematic. The German election, people aren't really focusing on that enough. What was happening in France around its fiscal situation, I know it's not an election anytime soon, is also problematic. So I think we've got many problems in Europe, but much of them are in the price. And therefore, this is just a short-term relief rally. And ultimately, it'll be more about what happens out of the US this year rather than the China fiscal story, which is going to support, it's going to help Europe, but it's more about stabilization. It's more marginal. It's not a new super bull market.
Mark, great stuff. Thank you very much indeed. Marcus Love, Executive Editor, Mark Cudmore. Let's talk about how European equities are performing this morning. Let's show you some numbers and give you the core six to give you an idea of what the centre of gravity looks like. A little bit of outperformance coming through from Schneider. I wonder if that's on the back of the interview that Jemana did a little bit earlier on with the CEO of that business. But elsewhere, actually, tech is showing a little bit of weakness. SAP's down, ASML is under ASML's down a lot this morning. 3% move to the downside on ASML is a significant move for a heavyweight stock. Elsewhere, you've got weakness in LVMH and Ferrari. Novo's flat. But the standout story, actually, to my mind, is weakness in materials, but also significant weakness in tech. Let's get some details on other stocks that we're watching. Joe Easton standing by.
We are seeing some big weakness in Puma today, guys. It's been a bit of a volatile day for these sportswear stocks. Remember, yesterday we had that massive beat for Adidas. That stock was up 6%, but Puma today going the other way on their weak net income. Now, analysts I've seen over at Citi pointing to double-digit % downgrades for the company in terms of their sales for the year ahead. So that does look to be the biggest weak spot in the market today, and potentially going to weigh on some peers later as well. AB Foods, meanwhile, Primark giving us a rare downgrade to some of their sales guidance. They have seen a big miss on their like-for-like sales in the last period, the key Christmas period. We do think of Primark being absolutely indestructible, don't we? But that stock really is surprisingly weaker. It was weaker by around 2%. It's actually coming up a bit at the moment. It has sold off given the weakness we've seen in UK retail over the past month or so. Then in terms of EQT, a couple of big financial movers, as Guy was mentioning, a lot of exits at the private equity company, 70% increase in exits in the latest period, according to the firm. So that is the best performer on the Stock 600 at the moment over in Sweden. And then another stock also on the Swedish market. This was Swedbank in the banking space, the first of the Swedish banks to report, and it does look like like strength in net interest income coming through once again, and the mortgage market looking pretty stable as well. We're going to get results out of Handelsbanken over the next couple of weeks and a few other firms, SEB as well. But this potentially looks like a good reader for that sector heading into those key updates from the Nordic banks. Then in terms of ratings, did see a couple in the commodity space catching my eye today. We had Total Energies, a buy over at Redburn. That looks to be a valuation call given some weakness versus their price targets. That one comes up to buy. Not too much of a reaction in that one. But the other one was Norsk Hydro back in the Nordics. I like this one because Kepler talking about a massive looming supply deficit in the aluminium market, which I thought was quite interesting. They're citing China and they reckon you should be buying into there. Again, we are seeing a bit of a broader weakness in commodities, given some softness in some base metals today. But Norsk Hydro, a buy over at Kepler, that one stood out to me. Keep an eye on that one over in Oslo later today.
Joe, thank you. Joe Easton from our equities team with a briefing on some of the stocks that are moving this morning. Thinking of sectors that are moving, technology is an area of weakness. We'll talk tech shortly. Coming up, Elon Musk and OpenAI Sam Altman spar over the US president's announcement on hundreds of billions of dollars in AI investment. More on that next. This is Bloomberg.
15 minutes into the equity market session here in Europe. There's a few little things that are on the move at the moment, which I think is quite interesting. This is the kind of the broader picture we are seeing across Europe. At a headline index level, you're not actually getting very much. At a single stock level, there's actually some quite big moves that we're watching out for this morning. But the Stoxx 600 is unch at the moment. That kind of tells you everything you need to know about the kind of the bigger picture story. But let's talk about some of the individual stock names that we want to be focusing on. Shares in Puma are one of the real standouts this morning. The stock is really under pressure. The sportswear company, do we call it a sportswear company? I guess we can call it a sportswear company, announcing a new cost efficiency program, disappointing earnings. Where did this come from? Nobody saw this one coming, certainly judging by the stock reaction. Tim Lowe joins us now from Munich. Tim, that's the question. Where did this come from?
Yeah, exactly. If you go back a couple months in November, as Puma was putting out its Q3 results, a lot of the signaling was that things weren't going so bad. The guidance was going to be hit for the full year. Things were still looking good in the midterm. And then this came out last night. The news was also a little bit vague in the releases, I think, and it's taken a couple turns for analysts and traders to sort of digest the news. The thing that sticks out for me is a profit warning. They're pushing back their profitability targets by about 2 years, and that comes after some disappointing fourth quarter results. The whole thing raises the question of Puma, where's the brand heat? What's going on here? And their crosstown rival Adidas just yesterday put out stellar results.
Yes, Tim, tell us more about that contrast, because disappointing enough to put this news into the market, but even more disappointing for investors when they sent the shares up 3% yesterday in sympathy with strong numbers out of Adidas, and then today looks starkly different.
Absolutely. And I mean, for Puma, they're in a tough spot. The Adidas CEO, Bjorn Gulden, had been the Puma CEO for about a decade, and it was a very successful era. So the new CEO, Arne Freund, he's a young guy. He's been trying to sort of come out of the shadows. And as soon as Bjorn goes to Adidas, Adidas starts taking off. They've really benefited from the retro footwear, the Samba, the Gazelle. They were first out of the gate with that at Adidas. Puma they have also in their archive similar shoes that should be able to compete with that, the Palermo, but they were slower to get it out there. And last year, Puma tried to come out with a brand marketing campaign, first in a while, just merely raise the excitement about the brand itself. And it just hasn't seemed to connect with the consumers. And a day after Adidas had stellar results, this is, I think, just throwing into sharper relief the challenges that Puma is facing.
Well, Tim, walk us through these specific numbers then. I mean, we know we've been talking about this cost-cutting program in response to that margin pressure, but just how pressured are those margins?
Yeah, so the company reiterated its midterm targets. It wants to get, its EBIT margin to 10% in the long term. Right now it was 7.1% last year. That's below Wall Street estimates. The number of people are really focusing on is 8.5%. Puma had said as recently as November that could arrive in 2025. Now they're saying 2027, assuming that these new cost-cutting measures bear fruit in conjunction with this brand campaign that I just referenced. So, some analysts have said there's going to be some significant consensus cuts today, looking at 2025 and beyond. So the shares are reacting to that right now, and one wonders when a sort of trigger may arrive that can resurrect that.
All right, Bloomberg's Tim Lowe walking us through the Puma story. Of course, those shares down pretty aggressively. We'll see just how far that drops.
Yeah, talking of stocks that are under pressure, ASML also under pressure over in the Netherlands, and the Dutch Prime Minister says he expects President Trump to keep pushing to restrict exports of ASML's chip-making machines to China. Dick Schoof spoke exclusively to Bloomberg's Chad Thomas at the World Economic Forum in Davos.
It's very important that the security of Europe is on top of our minds and also on top of the mind of the new American president, and therefore it relates very strongly, of course, to Ukraine, and make sure that peace in Ukraine is with Ukraine and with Europe. And economically, it's very important that the open relationship and the open trade relationship we have is still in place. So we are looking very carefully at import tariffs and what that could mean for our trade and our companies.
Do you expect Europe to remain united if there becomes a tariff war? Obviously, that's not what anyone wants, but is there a worry that it's sort of every man or woman for himself and countries within Europe don't stick together?
Well, there is always that worry. But in the European Council, I think we have the idea that we should do it together, that's important, whether it's on the positive side in making sure that Europe is competitive, but also, you might say, on the negative side, if we have to react to what the Americans can do, and that's going to hurt our economy.
Are there discussions already taking place within the European Council of how you would potentially react if you had to?
Well, of course, we had some discussions about how could we react, and one of the most important things is that we should react from a strong position. I mean, Europe has a strong economy, has a strong competitiveness already, has a strong consumer base, so that's important for the United States as well. So that gives us a strong position. So you can really rely on a good discussion with the new administration and see how you can work out all kinds of deals.
You have a strategically important company based in the Netherlands, ASML. What do you expect from the Trump administration when it comes to ASML?
Well, I think that in relation to the China policy of the United States, and also when we look at the Netherlands, we are aligned, more or less. But when it comes to ASML, we have on a weekly basis, we have discussions, and we want to make sure that ASML, which is a very important tech company, and it's very important for the Dutch economy and also very important for the development of high tech in Europe and in the Netherlands, we want to make sure that that position is in place, and therefore we also made all kinds of arrangements with ASML and with the local government and the technical university to make sure that ASML can thrive, but also the whole community around Eindhoven, it's called Brainport, can thrive.
Dutch PM speaking to Chad Thomas. Let's stick with the tech theme. Elon Musk is questioning whether the companies behind President Trump's $100 billion AI investment venture can follow through on their promises. The CEO of ARM, one of the companies providing technology for Stargate, he's indicated that the project has, quote, solid financial backing. Rene Haas spoke to Bloomberg's Caroline Hyde.
ARM will be the CPU of choice, if you will, inside these AI data centers. We power Grace Blackwell, which is the NVIDIA product that will be used, but lots of opportunity for all kinds of ARM technology. But most importantly, the CPUs that power Stargate, they'll be ARM.
So already, as you say, integrated into Grace Blackwell. What sort of innovations could this stir on your side? What way will we see your designs progress into this supercomputer and more to come, maybe?
$500 billion of investment and multiple gigawatts of energy require incredibly efficient processor solutions. So I think as we go forward, as these plans get more and more defined, I think there'll be more and more opportunity. But right now, we're super excited to be involved with NVIDIA and Grace Blackwell.
I think that's so key as these plans get more and more defined. These are, at the moment, pretty new announcements coming, but people questioning how new the ultimate decision to spend has been, because we already had Masa, of course, this leader of SoftBank, which in many ways owns a large part of Arm, talking about this $100 billion investment in infrastructure in the US, but a few weeks ago. How long has this been in the making?
These discussions have been going on for many months. Something like this does not happen overnight. I think the world has seen that to reach AGI or ASI or some of the capabilities of artificial intelligence, a tremendous amount of capital is going to be required. Obviously, a lot of power is going to be required. A lot of compute is going to be required. Masa has been looking at this for quite some time. We've been talking to the OpenAI folks and Oracle and MGX and Microsoft and NVIDIA. So I think what you're seeing that just came together was the culmination of all those conversations, but it didn't happen overnight for sure.
Does it have the money? I'm afraid some shade being thrown on this project by one Elon Musk. Do you have anything to provide? I know you're the technology partner, but what about the capital?
Yeah, I haven't seen Elon's tweet, although I certainly have heard about it. There is a lot of backing for this, Caroline. Believe me, it was not taken lightly to make the announcement yesterday at the White House with President Trump. So I think you can feel pretty good that the financial backing behind this is quite solid.
That was the Arm CEO, Rene Haas, speaking to Bloomberg, saying the financial backing behind this Stargate project is quite solid. And just backtracking then what Caroline was saying, yeah, Musk questioning if the company's if the project has the money that it says it does. Not the only voice, actually. I saw the Anthropic CEO also questioning whether there is the money that is needed for this. And Sam Altman kicking back and saying, yes, we have the money, and Elon Musk, you should be more pro-America, was his message.
I mean, that's quite the rivalry now showing up on this stage. I think it's fascinating, though, but isn't the part of the issue of trying to quantify and trying to price in just how far this rally actually takes, because nobody actually knows, one, how long this rollout is, how much investments it's going to take. We just know that it's a lot. We don't actually know what those numbers are.
They're going to be big, though, aren't they? But we already know they're going to be big, and that's the point. Like, how much of this is already factored in? How much of this is new money? How much of this is already existing projects that are kind of in train and already being talked about? I think that's a key question as well. I haven't talked a lot about NVIDIA around all of this. Presumably, it's going to be a pretty big beneficiary of this. Kind of, what are the companies that are also going to benefit from this process too? Is this enough to keep the AI train on the track? I think that's a question that investors are going to be looking at.
It certainly was yesterday.
Yeah,
wasn't it? Pushed NVIDIA share price and the share prices of some of the other companies involved a little bit higher in yesterday's session.
Yeah, I think it also brings up the idea that so many of these are private companies. Does this now, if we start to see a little bit of lightning in the deal glut, maybe some of these private companies go a little bit more public? We'll have to see, and then give NVIDIA a run for the money. Coming up, we're going to take a little bit of a pivot here. We're going to return to the Swiss Alps for a conversation with the Egyptian Investment and Foreign Trade Minister. That conversation live from Davos next. This is Bloomberg. This is the opening trade. We're at 30 minutes into today's session. Seeing some green on the screen, not massive gains, but certainly marginal ones. A little bit of a reversal from what we saw just 30 minutes ago in the futures picture. But of course, it's not maybe the markets that are driving the news agenda this morning. JP Morgan's EMEA CEO told us earlier this week that the Middle East region appears to be a clear winner for investors. The optimism comes despite geopolitical tensions and global uncertainties, with Donald Trump returning to the White House. It's a key topic our very own Jumana Bersechi is following at Davos. Jumana.
Yeah, thanks, guys. Thanks for the intro. And interesting to see the JP Morgan perspective on the region. Joining me right now is Hassan Khattib, the Egyptian Minister for Investment and Foreign Trade. Trade, obviously, very much in focus over here in Davos. With the return of the Trump administration, the touting of potential tariffs. And I've got to think, from your perspective, you hear that and you think this isn't going to be good for us.
First of all, it's a pleasure to be with you, Jumana, and with Bloomberg. I think on trade, Trump policies have been in action for some time. In his first term, we've got to know his actions, and he put tariffs on China and several other markets. And to be honest, actually, Biden administration did not revoke many of those tariffs. So What we're seeing is actually a trend that has started, in my view, almost 10 years ago. So the globalization as we knew it is, in my view, is a chapter that is actually fading away.
Yeah.
We're now in a new chapter, which is all about tariffs, borders, bilaterals will replace the global alliances or the WTO in nature. I still believe that the WTO rules should be the game, or at least the ground for trade. But in reality, most of what we see globally today is governed by the trade remedies, safeguard measures, monopolistic protection is the name of the game. All in all of these measures are inflationary in nature.
Yeah.
And that's what we're seeing. So globalization over the past 3 to 4 decades have produced massive economic growth globally, lifted hundreds of millions of people out of poverty. And the modus operandi, as we put it, was actually the most efficient way of production. Now, after COVID and after these measures that has been in action for 10 years and more of which will be in place with the Trump administration, we call it the resilience model, nearshoring, trying to bring it close. But all of these would mean that you're producing at a higher price, which is inflation.
Yeah, and interesting what you're saying about the push for bilaterals. I'll get to there in a second, but something else that I think is really relevant to Egyptian trade right now is shipping and the Red Sea shipping routes. You've got the Houthis saying that they're likely to stop the attacks now that there is a ceasefire in Gaza. What does that mean to Egypt? Because you really took a hit from all of the receipts that were coming through the Red Sea.
Absolutely right. I think the Suez Canal proceeds are down by 60 to 70%, which is massive. In a year like last year, it's a tough place to be in. I think with the ceasefire, we need to be cautious. We're cautiously optimistic. It's the first ceasefire that has been enacted for a long period of time, and it's still early to judge. I think the Houthis announced that they could stop their attacks on the ships. But all in all, I think we're cautious. We want to study it. We will talk to ship owners, or at least ship liners, and we will try to see their line. It's not going to be an immediate switch back to Suez Canal as we envisage. What matters for us as Egypt, as we've been always engaged in the negotiation to try to bring this ceasefire, is how resilient that is and what follows.
Yeah.
And more importantly, what follows.
Yeah. Let me ask you about the Egyptian economy. If we had been sitting here a year ago, the prospects for Egyptian economy were a little bit different. And then, of course, you had the big investment from the UAE into Egypt that turned things around. You had a series of reforms that the government started to introduce, a massive currency devaluation. How do you see the economic picture right now?
Let me give you the perspective of how we see the Egyptian economy, and I'll take it on a longer period of time. The Egyptian economy last 10 years followed 2 revolutions, 2011, 2013, almost 2 to 3 years of complete stoppage. The government stepped up its action to stimulate the economy. So the last 10 years' title is a government-led economic growth. And in doing so, the private sector share in investments went down from 70 plus to almost 24%. This government mandate is to bring back the private sector, is to make sure that we have a business environment that is conducive for the private sector to prosper, to grow, and to lead the economic development. That's the title. This is what we're trying to do. And in doing so, we're clearly put forward what the investors would want, which are clear, predictable policies that are investor-friendly, that will bring the economy to a real competitiveness.
Yeah. I mentioned UAE with the big investment. I know that other countries in the GCC have also been engaged with Egypt, Saudi Arabia, Qatar. Can you give us an indication on some of the potential deals that could go through there?
I think the deals are always in nature a one-off. What we want is a sustainable growth. And that's why I go back to policies. The job of government is to put the policies that attract FDI, investors, make sure that the investors in them operating already in Egypt are doing well, and then we attract the FDI. And these are the monetary policy, the fiscal policy, the trade policy, and the role of the state policy. These are the 4 policies that we're mandated. I'm a member of the economic team, working closely as a team. But I go back to what you highlighted in terms of the evaluation that took place last year. The important is not a devaluation anymore. The importance is a monetary policy that is understood, that is investor-friendly. And that's what we have today.
Yeah.
This is part of the central bank role. But the central bank narrative today is very clear. For me, it's something that we can put forward to investors, and they would actually like it, because simply it's inflation targeting and a flexible exchange rate, which means that when you do a business in Egypt, you know that your currency will be always competitive rather than a fixing currency, and then after 3-4 years, then you're expecting a devaluation.
Yeah.
That's one policy that is clear. And so on, we can talk about the others.
No, I do want to ask you, I want to go back to what you were saying about bilateral trade deals, because I know Egypt has been in discussions with the EU, and obviously the EU are looking for different markets now for their exports. What scope is there, do you think, to get this across the line, and how much of a tangible economic impact do you think it's going to have?
We have an agreement with the EU-Egypt partnership, and it has been there for some time. The trade balance is actually in the favor of Europe. What we're trying to do now is to open a new chapter. Historically, we've been, again, the negotiation with the EU has always been, we've put certain limits on imports. On the case of Egypt, they actually complain about it. So actually, when I visited Brussels, what we told them is actually we're going to take all of these out of the discussion. We want to have a WTO guidelines, and we're actually we're following the checklist of what we have. What I want a narrative, and actually the government of Egypt want a narrative whereby we will balance the trade, investments for trade. And I traveled to many countries in Europe so far, Germany, France, Denmark, Norway, Northern Ireland, and our discussion is all about it's a win-win situation today. If you come today, if you look at the European competitiveness in manufacturing, cost of labor is possibly 10 times that of Egypt or the Mediterranean between Egypt and Morocco. But Egypt is very competitive today in terms of labor force, in terms of infrastructure, in terms of connectivity to the rest of the world. We're at the center of 3 continents. Africa is a huge potential. And we have the trade agreements that actually put forward the products for 70 markets. So the reality of the matter, that's what we told them. We tell them it's a win-win. Come and invest. We need your technology, but you can produce at a very competitive prices, and you can maintain your competitive edge. And that's the narrative that we're trying to put forward.
Fantastic talking to you. Thank you so much for taking the time to speak to Bloomberg. That was Hassan Al-Khattib, the Egyptian Minister for Investment and Foreign Trade.
Jumana, thank you very much indeed. Bloomberg's Jumana Masayoshi joining us for the World Economic Forum.
Let's talk a little bit about the other geopolitics around the world. President Donald Trump is threatening more financial penalties on Russia over the war in Ukraine. Trump said on his Truth Social network President Vladimir Putin should make a deal soon or face more taxes, tariffs, and sanctions on Russian goods. Meanwhile, Ukraine's president says any effective peacekeeping force in Ukraine must include U.S. troops to support European allies. Vladimir Zelenskiy spoke exclusively with Bloomberg's editor-in-chief, John Micklethwaite, at the World Economic Forum in Davos.
It's great if we will have troops. But we have to understand that the troops will not be in the center of the capital.
Yes.
They will not have relaxed time. Yes, it's very important, because I heard that some allies said that, yes, but it's okay, we can be in the center of some city, and then no, we don't need such contingents.
You want the front line.
Yes, with our people, of course. Yes, because this means security, and that's it. So, but it can't be. It can't be without the United States. I will explain you why. Even if some European friends think that it can be, no, it will not be. First of all, nobody will risk without the United States. The second, that's what can divide NATO, divide EU and USA. That is a goal and dream of Putin, to divide this unity.
You mentioned China. How important is China in these negotiations? I mean, China is the backer of Russia. They seem to have had an impact on things like Putin not using nuclear weapons, those sort of things. Can China push Putin? And do you have any contact with the Chinese?
I had some contacts with Xi Jinping. We had a phone call during the war. Not too much, not enough. I think. Yes, he can push Putin to peace, I'm sure. I think that only President Trump is the strongest, and Xi Jinping. I think that there is no other allies who can really do it. Yes, because his economy, Putin's economy, after sanctions, after everything, depends very much of China.
You would like Donald Trump and Xi Jinping of China to work together to push
I think yes.
Putin.
Yes, but not without us. Not without it's important.
Ukrainian President Volodymyr Zelensky speaking exclusively at Davos with Bloomberg's editor-in-chief, John Micklethwaite.
Coming up, we're going to head back to the World Economic Forum. We are going to bring you a live interview with Richard Gnodde, the newly appointed vice chair over at Goldman Sachs. That conversation coming up next. This is Bloomberg.
I don't like to talk about deregulation. Rational regulation in our sector, in any other sector, could be good for growth. But if things go too far, then the Fed may have to hike rates and deal with inflation. Hopefully it doesn't happen.
Daniel Pinto, there's JP Morgan president on regulation and U.S. growth. Return to Swiss Alps now to join Bloomberg's Francine Lacqua. Fran.
Thank you so much, Christina. I'm joined by Richard Gnodde, the newly promoted vice chairman of Goldman Sachs. Richard, first of all, good morning. Thank you so much for joining us. But look, a change of job, a change of title. How do you feel about it?
I feel fantastic. For the overall firm, it's a hugely exciting and energizing time. If I put it into a broader context, if I think about 2023, 24, it was really nailing the firm's strategy, which we've really got set. Putting in the organizational structure. But of course, people is the most important thing here. And we've now put in place a broad set of leaders that can really take this forward, execute, and deliver over the next 5 to 10 years. And so that's what this is part of. For myself, I've given up my CEO responsibilities for GSI, but I'm thrilled to have the remit to really operate broadly around the world and spend time with our people, our clients, and I'm very excited about the next period of time.
So what's the one thing that Goldman has to do now? Is it talent retention more than actually getting strategy right, which actually has proven to be the right thing to do?
We've got to have the right people and we've got to have the right culture. And if we get people and culture right, Goldman Sachs will continue to be a great firm. And so we focus on that day in and day out. We invest in it. This is part of that investment. The other thing I'd say is, we focus so much on making sure that we've got a deep bench. But there's no point in having a deep bench if you don't use it. And this is an example of us really using that bench and bringing the next generation off. And there's going to be a huge amount of energy, and our clients will feel it, our people will feel it. It's an exciting time.
Are you expecting to also hire a lot more, given all of the animal spirits that could be unlocked in the U.S., and what does it mean for the rest of the world, including Europe?
Well, we always try and modulate this. It's easy to get carried away. None of us can predict the future. We all know how it feels right now. If you're sitting here and you're talking to someone from the US, it's huge optimism and enthusiasm. If you're talking to someone from Europe, it's a little bit less the case. And so we try and hire with a longer-term view. These are long-term careers. We're not bringing people in for the next 12 months. We're bringing people in for a career. So hiring in at the bottom continues to be hugely important. We do that whatever the cycle is. But of course, we're adding all the time to our organization. The organization is growing.
I haven't met one single person, almost, that's really optimistic about the UK or Europe. Are you?
No, the mood's not good. My takeaway would be, and we all know the numbers, so there's no point in or need to rehearse them now. The sentiment across, the big cap, the big name European industrial companies, that CEO community, there's an increasing level of frustration because obviously they can see what's happening in the US. Frankly, a lot of them are investing significant dollars into the US. That's where the money's going. But they also want to invest and grow and build in the European economy. And so there's an increasing sense of frustration. And I wouldn't be surprised if we see that community broadly becoming much more assertive. Assertive with the regulatory framework, assertive in Brussels, in their own domestic capitals, and really leaning in. Because I think everybody knows what the program needs to be. But I think people are done with the talking. People really want to try and push this into action. And if there is no response from the discussions, then one's ready. And I think we'll see more assertion going forward, I suspect.
Richard, how do you see client behavior? Are they going to spend more money? Are Europeans and international investors just going to be spending more money in the US, or are they staying put for the moment until they figure out what happens?
Both things are happening. So the opportunity and the returns are obviously there in the US, and we've seen the activity of this week. That's only going to encourage that behavior. So we'll continue to see capital flowing in that direction. But look, Europe is a very, very large and significant economy, and people want to participate here. So I think we'll see more restructuring. We'll see more consolidation. There's a real need across Europe to build global champions of scale that can compete globally. And certainly in our backlog and our client discussions, M&A activity, big strategic transactions, we're seeing, frankly, as much of that as I can remember. So I think things are going to move.
Private credit, what's your ambition there?
Well, as you know, we've got about $140 billion of private credit sitting in our alternative asset management business, and we aim to double that. We want to get that through $300 billion, and then we'll take it from there. This is a really important source of financing for our client base, and they will continue to use it. We're obviously managing that alternative asset platform for investors. But if you're a user, if you're a corporate, you can go to the bank market, you can go to the public credit markets, and you can go to the private credit. And having that choice is important. It all ties into the capital markets union concept in Europe. We need to develop these markets. We need to develop the securitization market. Let's see what gets done.
I mean, what do you think Donald Trump's administration will unlock in terms of, crypto? Are we going to see a really big deregulation, which would also prop up private markets?
All I can say is if you're an entrepreneur and you're getting out of bed in the United States this week, you are full of optimism and energy. And whatever your chosen field, it may be crypto, it may be fracking, it may be just starting a business, you're going to be optimistic that you can drive something forward. So I wouldn't isolate it sector by sector. I think the energy will be contagious, and it'll be contagious across all parts of that economy, and I think that's what we're going to see. Now, we can't predict the future, as I said, so let's see how all of this plays out. Obviously, the markets themselves have anticipated a lot of this. Last year, the US market up 20%, it was up 20% the year before. That market's not going to grow 20% year in, year out. So, we need to have some sense of moderation in terms of where the market is. But the underlying energy across the economy, the economic growth, plus 2%, does it get to 3%? Time will tell, but there's a lot of energy there.
I mean, there seems to, equities are priced to perfection in the U.S. Should that be a worry when there's a lot of talk about inflation being a concern for the Fed?
Well, let's judge perfection with hindsight. It depends what happens. Maybe they're priced for perfection, maybe they're not. But obviously, rates are a huge focus. We've seen 100 basis points of rate cuts over the last 12 months. We expect another 50 this year, maybe another 25 in 2026. But the data is going to determine how that plays out. And obviously, if the economy is running really hot, it's going to be more difficult to have those rate cuts. The tariff discussion, we'll see how that plays out. If that is on the margin inflationary, again, that'll make it more difficult for rate cuts. There's a lot in front of us. And so, the range of outcomes is as broad as it's ever been. And I think both the left tail and the right tail, they're long and they're fatter than they've been. So I think one needs to be forward-leaning. The wind is at your back. But I think you need to be a risk manager at the same time and be looking left and right and make sure that, you're anticipating all the potential outcomes. They're all possible.
Is that your biggest concern, this kind of bifurcation, or trying to understand, the positive and the negative?
That's our job. Our job is to be ready for whatever the outcome is going to be, and we advise our clients in that way. We manage our own risks in that way. Because, as we said a couple of times in this discussion, the future is hard to predict.
Richard, in terms of the announcements that we've had, I think you've doubled the management committee. If you look at the numbers, more women would probably be welcome. What's the secret sauce on that?
We continue to drive those initiatives. You're absolutely right. It's a huge priority for the organization. Our most recent partner class, which we announced at the end of last year, in our European partner group, actually 38% of that class was women. It was the highest number ever. Globally, it was in the high 20s. We would love to have more representation on the management committee. We will get more representation on the management committee, and we're pushing people forward. And I think if you look beyond the management committee and some of the recent announcements, there are a lot of very, very important jobs, which are going to women. The leadership bench there is growing in a very, very good way. We'd all like it to go faster.
Thank you so much for joining us. Richard Gnodde, they're the Vice Chairman of Goldman Sachs. With that, I'm going to send it back to you in London, Guy, and we'll have plenty more throughout the day here from Davos.
Francine Lacroix at the World Economic Forum in Davos, talking to Richard Gnodde. Thank you very much indeed. The Trump theme is definitely going to be very present at Davos today. What is it, 4 o'clock? He's joining
WEF. He's going to be addressing WEF, and there is going to be an opportunity within that for CEOs in Europe to ask questions. You had a great suggestion earlier about learning lessons from the United States about deregulation, that kind of thing. I wondered if you were going to ask a question about China, if you're a European CEO, maybe getting a sense of his evolving thinking around China, because it does seem as if it is evolving. He seems less aggressive on China, on the tariff side of things, on his impression of what they can do with TikTok and spying intention. So I think his evolving thinking on China and how it is shifting would be an interesting one to explore.
Yeah, absolutely, and just what the extent of that actually looks like, because he's already building on top of a farm deal that he had kind of pushed in his first administration, a farm deal that I'm now curious if he pushes on Europe as well. At least that was a comment he made in the press conference.
If I'm a European CEO, do I need to pick sides? Do I need to pick the United States over China? Is it zero sum?
Maybe you don't want to know the answer to that.
well, we experienced this with NVIDIA, right? NVIDIA's already had to make one chip for the U.S. and one chip for everybody else, and that has already kind of undermined one of the world's largest companies.
Or for a European CEO, how much gas does Europe have to buy to make this whole thing go away? If we could just
Patrick Pouyanné's going to be
one,
the Total CEO apparently is asking a question, so that energy story is going to be front and centre.
Yeah, and it's fascinating because that's exactly what is about to get deregulated in a very big way in the United States. The LNG story was one of Joe Biden's big points that he wanted to have more restrictions on, not less, as serving the climate agenda. We'll see if that ends up helping or maybe hurting the bottom line of Shell.
Okay. That wraps up the show. It doesn't really wrap up the show. The show continues. The show is definitely continuing. The Davos theme is going to be absolutely front and centre. NATO Secretary General Mark Rutte is going to be joining us later. Nadia Calvino is going to be joining us. Ted Pick is going to be joining us from Morgan Stanley. The Saudi finance minister is coming up. You get the picture. There's a lot coming up, but we are building towards that Trump event a little bit later. The Pulse is next. This is Bloomberg.